On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Today, I wanted to talk about the election, which isn't far away, October 14th, so less than 3 months to go. You're really starting to see the campaign heat up. You're hearing all of those political experts, both professional and some of the amateur ones on social media and everywhere else, beginning to speculate on what the makeup of our next government might look like. And I did have a look on an Australian betting exchange, Betfair, which allows people to bet on all manner of things, sports, horses, but also politics around the world. And I thought it was quite interesting to note that according to that betting exchange, change is coming. A national victory paying relatively short odds, just over $1.40. That's the sort of odds that a sports team pays when they're expected to win. Labor offering more than $3, which makes the incumbent leadership very much an outsider. So we'll have to wait and see whether those odds prove to be accurate or not. But at the moment, the bookies are suggesting that the most likely outcome is a change of government. Would that be a huge surprise? I guess in many ways, no. We've got a pretty sluggish economy. We've got a very high cost of living with inflation sitting at 6% per annum. But this time last year, it was at north of 7. It was the highest since 1990. Not looking like it's going to go down anytime soon. Things like food prices and housing costs that affect all of us are really biting. And we've got the steepest mortgage rates that we've seen in at least 15 years. So that also affects a very large group of people. So you can see why the government isn't as popular as it has been in the past. That it's the economy that does tend to have a large bearing on political outcomes in many cases, because that's what people see and feel and experience in their daily lives. Have I got money in my pocket? Can I pay the bills? Do I feel good about the future? Do I feel like my job is secure? Can I put food on the table for my family? Can I fill the car up with gas? That is what, those are the sorts of issues that affect the everyday person. So these things do matter, which is why politicians watch them very, very closely. Law and order is also seen as a big weakness for the current government, and recent events have highlighted that in the eyes of many. And in addition, poor old Chris Hipkins, he's only been Prime Minister for 6 months, but he's had more than his fair share of internal issues, dysfunction amongst his team, and distractions to deal with. So none of those things have helped the government. However, look, I do think it could still be a tight race. I would not be counting my chickens if I was expecting a change of government. I still think it could be quite close. And 3 months in politics, a lot can happen. There could still be some water to go under the bridge between now and October. You look at the recent polls, and you've got to sort of add up the blocks. You've got to add up National and ACT and sort of put them together. And then on the other side, you've got to look at the combined support for Labour, the Greens, and Te Pāti Māori. So you can't simply look at National versus Labour, because the smaller parties actually count for a lot these days, much more so than they have in the past. Recent transgressions could sort of change some of those polls when we see more come out. Obviously this week we've had Kerry Ellen's resignation and the circumstances with which that has come to pass probably won't have done Labor any favours from a PR perspective. But where are those votes going to go? If you have a few Labor voters who might have voted for Labor and that sort of puts them off, they're not necessarily going to National or ACT. They might simply move to the Greens or something like that. So you've got to remember that you're talking about the left bloc and the right bloc. It's not always about this party or that party. In fact, I think those two big parties, National Labour, I suspect they're quite disappointed in how they've been tracking. Neither of them are doing sort of super well compared to how they have sort of through history. If you look at the average of the last decade or so, I think National has typically polled sort of around that 38% mark. Has it been that much? I did run some numbers, just double checking. That's since the 2014 election. So we're going back almost a decade. You look at all the polls, National's sort of averaged around 38. They're sitting at about 34 if you look at the last couple of months worth of polls. Labor typically been about 36 since that 2014 election, and they're sitting at about 32. So both of them are around 4% under where they have historically been over that period. So I don't think either of them are sitting there really high-fiving each other. I think they'll probably both be disappointed in the way that they have been tracking of late. ACT continues to resonate very well. They seem to have benefited from the fact that National sort of went through a period of sort of turmoil where they weren't sort of going so well. ACT seems to have been a beneficiary, and the last several polls have sort of had them at around that 13% mark in terms of support, higher than they've historically enjoyed. I think that'll continue. My back of the envelope sort of surveys and feedback I get traveling all around the country, talking to even people in the national strongholds, agricultural areas, lots of business people who would be a typical national voter. A lot of them do want to see change, but the current national leadership hasn't resonated with a lot of those people. So there are a lot of people that are sort of like, well, I want to see a change of government, but I'm not super excited about this version of the Nats. So ACT has benefited from that, and they continue to get some good support. In terms of the smaller parties on the other side of the fence, the Greens, it's been pretty consistent. I think they've probably averaged circa 10% over the last decade, and they're sort of sitting around just below that. Maybe around the 9-ish level if you sort of do an average of the last 6 or 7 of the major polls. So they've probably been more consistent than most. They have got a good sort of support base. Te Pāti Māori, this is one that could be a bit of a dark horse. I would watch them very closely. I think when you think about sort of Labour, then the Greens and Te Pāti Māori, Labour is certainly the most mainstream of those parties. They're the biggest, so they would be. They're trying to appeal to the biggest group of people, which sort of does sort of push you to the centre and make you a little bit more mainstream. So there will be people that sort of want to see more change. They're disappointed that we haven't seen a more transformative approach from the Labour Party since they've had that very strong majority that they enjoyed from the 2020 election outcomes. So some of those people would have gone, one step to the left to the Greens, and even the Greens, some would argue that some of their policy approaches aren't quite as dramatic as you might have seen in years gone by. So I think Te Pāti Māori is potentially benefiting from people moving one step further to the left. They have got some relatively out there policies, to use a technical term, certainly more so than, the Māori Party of the past. It wasn't so long ago that they were in coalition with National under John Key and Bill English, and it's a different group with a different approach today, and that will appeal to some of those left-leaning voters who believe that the larger left-leaning counterparts, the Greens and Labour, aren't doing enough. So look, there's lots of things going on. Then you've got New Zealand First. Who knows where they'll be at the moment? It doesn't look like they'll be anywhere. But is anyone really brave enough to write off a party where Winston Peters is in the background pulling the strings? You've still got to keep your eye on them, and then you've got the likes of Top and others. But those ones I've mentioned are really the key ones. And I guess my point is that it could still be close when you add sort of that left block, right block. But also fair to say, Nationals in the box seat, and if they play their cards right, there is a reasonable chance that we do see a change in October. If that does happen, that would mean that this current government, the Ardern-Hipkins regime, I'll call it, they would have had the shortest tenure since the 1980s, getting in 2017 and then exiting in 2023, just 6 years. You've got to go back to the 1980s to find a government that only lasted that long. Key in English, that was 9 years, 08 to 2017. Helen Clark, that was 1999 to 2008, another 9 years. Bolger and Shipley, pretty much all through the 1990s, 1990 to 1999. So to find a government that has only lasted 6 years, it's actually never happened in the MMP era. MMP came in 96. So you've got to go back further than the MMP era, back to Longy, Palmer, Moore, back in that 1984 to 1990 zone. So it's probably not something to be proud of, to be the shortest tenure since the 80s and the shortest tenure of the MMP era, especially when you're coming on the back of that record support that they got during the pandemic. It will be a big turnaround. For the economy, what can we expect? Well, what we do know is that uncertainty always prevails as an election approaches, and you're seeing that at the moment. It happens every election year. Don't be surprised. It's normal. Businesses as well as consumers and investors, not across the board, but in many ways, they do tend to sit on their hands. They'll refrain from making any major decisions, which is common sense. The policy backdrop is up in the air. What's going to happen here? What's going to happen there? Where the rule's going to be? Where the goalpost's going to be? Well, we don't know. We'll find out in October, though. It's only 3 months away. So let's just put that decision on ice and we'll revisit it at the back end of the year. So that just stifles activity. When people and firms are just hitting the pause button in some of those decisions or growth plans, and it does just exacerbate sort of a weak period that your economy's in. So that's what I think we're right smack in the middle of at the moment, and it's not surprising. However, once elections are out of the way, most firms do simply choose to get on with things, rather than letting the political landscape, derail all their plans. And I think that's sensible too. Even if you don't get the outcome that you want, well, we've still got a business to run, still got a farm to run. We've still got a life to get on with. So, oh well, let's get on with it. And that's what tends to happen. So you do get a bit of a spurt of activity beyond the election outcome, regardless of who gets in, to varying degrees. But I think that is what you'll see. And that makes sense. Like, if you're starting a business today, or if you're a 30-year-old, embarking on your farming career today, you're taking a 10, 20, 30-year view, aren't you? And if that's the case, then you're probably sitting back thinking, well, look, I'm going to see 2, 3, 4, 5 different groups of policymakers in my business journey, aren't I? Of course I am, because we know that's the way things work. So chances are you're not going to be unhappy. I mean, you're not going to be happy with all of them. There'll be at least 1 or 2 regimes where you won't like what they do. You won't like changes that they will make, and you will have to pivot or adjust your approach. And as investors, we've got to take that same attitude. If you're investing in the share market today, or the bond market, or the property, or whatever it is, if you're starting a tech startup, or anything under the sun, and you plan to be there and grow that business or that operation or that property for the next decade plus, I can tell you now, you're going to see a couple of different governments, and you're not going to be happy with all of them. So you can't just sit on your laurels and do nothing and be grumpy about it. You actually have to make the best of it. We look back through history, investment returns in New Zealand, and I'm talking about primarily shares and houses, because those are the main ones. Investment returns have actually been pretty good under most governments. Certainly some that are more lucrative than others. The key in English years, as an example, were very kind to the New Zealand share market. Certainly in the last 30 years, it was those Helen Clark years that were very friendly to the property market, more so than any of those sort of national governments. So you'll get your periods where this does better or that does better, but both those two asset classes have delivered pretty solid gains, right the way through, irrespective of who's been in Parliament. And to find a government that's provided over a negative return, from when they came into power to when they left, a negative return point to point through that period, I had to go back 50 years. I had to go back to the early 1970s, Kirkham rolling. So under the 6 governments we've endured, I think endured's an appropriate word. Under the 6 we've had since 1975, both of those asset classes, shares and housing, have increased over the course of each and every one of those tenures. So, look, don't panic. That's not to mean there won't be winners and losers beyond October. There will be. There will certainly be some sectors, some industries that will fare better than others, depending on the outcome. There's some parts of the economy that will be really hoping that we get a change of government, because it will be better and easier for them to get on with things and do business and succeed. And there will be others who might feel the opposite. So, you're always going to have winners and losers on both sides of the fence. One example that comes to mind is the electricity sector, from an investment perspective, that is. Many of you will recall back in 2013, as we were heading to that 2014 election. So this is in the years when John Key and Bill English were in charge. 2013, you had Labor and the Green Party propose significant changes to the electricity industry. NZ Power, all these changes, these other changes, and those never eventuated. But the threat of that significant change, one of the impacts of that was that the 3 state-owned enterprises that the national government of the day was in the process of partially IPOing on the share market, partially listing those shares on the share market. The companies in question were Mighty River Power, which is now Mercury, Meridian Energy, and Genesis Energy. And the government ended up selling. They only sold half, they kept the other half, but the half that they sold ended up being sold for reduced prices, because you had this dark cloud of uncertainty hanging over that whole industry. And investors knew that, well, hang on, we've got an election in 2014. If you get a change of government, they're going to completely change the rules, and these businesses are not going to be the same businesses. So that basically made those businesses sell for cheaper. And the existing companies that were listed on a share market, which at the time was Contact Energy and Trust Power, their share prices were negatively influenced as well. Actually, lots of companies were negatively influenced, because you had this overall threat of more regulation, and investors thought, geez, New Zealand's going to become a very over-regulated country. So, there's lots of businesses that we view less favourably. Anyway, it never happened. And to be honest, my personal view is that proposal from Labor and the Greens was really just designed to derail that process of the asset sales. They didn't like the idea of those partial sell downs. So I think a big part of coming up with that proposal was to sort of try and torpedo it. They didn't achieve that. It still happened. All they ended up doing was meaning that the government of the day got lower prices for them, which meant that there was a transfer of wealth from all New Zealanders, because they're owned by the taxpayer, to that group of people that bought shares in those three companies. So, it was sort of a very counterproductive approach to take. But those are the sorts of things that can happen and that we need to think about. There's no obvious ones that I think about looking ahead to this election. No obvious sectors that are well and truly in the gun. Maybe the housing market is one example, certainly not to the same degree, but that's one sector where you have got quite big differences between what National and Labor would do. A lot of the policies that Labor has put in place in recent years haven't been friendly to investment in residential property, and the big one there, the game changer, was the interest deductibility. Making interest not deductible anymore. If National came in and followed through with some of the suggestions that they would unwind some of those rules, then that could be quite a positive for the property sector. That it'd impact, potentially house prices would maybe be in a better position. Companies like Ryman Healthcare and Somerset that are sort of pseudo housing market exposures. The likes of Winton Land and so forth. All of those companies on our market that sort of have an element of house price growth attached to their prospects. So that's one sector that maybe would be impacted, but there's no other super obvious ones. Certainly not in the same camp as what we saw a decade ago. But that's the best example I can think of from years gone by. However, look, I think for investors, you've got to remember that good quality assets and great businesses can still perform well, regardless of who's in office. Remember those last 6 regimes going back almost 50 years, share markets performed positively under every single one of those governments. So you don't need to run for the hills. You don't need to make wholesale changes to your investment strategy on the basis of politics. If you think I'm being naive with giving that sort of advice, and there will be people out there that believe that, they'll be thinking, geez, Mark, you're a bit relaxed. Like, look what's coming. There are bad things coming. We're not happy with the direction of the country. We've got much more to worry about than you're suggesting. Well, as a share investor, you've got options to deal with that. And your best option, if that's your view, is to simply put more of your capital offshore. Invest more of your money overseas. So business owners can't do that. If you own a business in South Auckland or in Christchurch or in New Plymouth, you just can't sort of up and sell that business and sort of buy one somewhere else, not quickly and easily and cheaply, at least. If you own a farm, if you're just a sort of a lowly sort of employee or worker, and your life is sort of here, you don't have the luxury of being nimble enough to make those changes. You're kind of a bit more stuck with what's happening here domestically. But if you're a share investor, or if you've got an investment portfolio of financial assets and you're unhappy about what you're seeing, very easy to hedge your bets. And you can do that quickly, easily, and cheaply. You just reallocate some of those funds internationally. And then if things do tank here in New Zealand, if our share market underperforms because we've got the wrong leadership doing the wrong things, if our prospects become worse, the currency will fall. So, you'll benefit. You can do something about that. I don't think we need to panic. I'm very much of the view that as long as we are invested in good businesses, and there's plenty of them here in New Zealand, just like there are overseas, good property assets, good quality bonds, and if you're getting good advice from your advisor, and you will be if you're with Craig's, then you're probably okay. But I guess my point is that if you disagree with me and you think that the wheels are set to fall off, then well, that's okay. There's an easy solution that you can employ to do something about that. So, best course of action. Have a think about all this, talk to your advisor, get their take, and act accordingly. But one word of advice that I would give you, last thing before I wrap up, is don't forget that Australia, the UK, Europe, and the US, Asia, they've all got politicians too. And they aren't necessarily a whole lot better than ours. In some cases, they've got bigger problems and they have a direction of travel that in some ways isn't as fantastic as you would like either. So, it might be a case of out of the frying pan into the fire. But nothing wrong with hedging your bets. So that would be my suggestion. All right, we'll wrap up there, everybody. Thanks again for listening, as always. Talk again soon.
For more insights, visit craigsip.com.